Global stock markets were encouraged yesterday from signs that perhaps Trump's tariffs may not be as punitive as initially thought. Let's have a look at the reaction from global markets yesterday. Let's have a look at global stock markets in dollar terms. It was actually a positive day in dollar terms yesterday, led by the US and in particular the technology sector. The reason behind this was there was an article in the Washington Post suggesting that the tariffs imposed by Donald Trump may not be as stringent as initially expected. This is quite important for the technology sector, as around 57% of their revenues or their sales are generated from overseas. So this was seen as a positive. We also saw positive earnings expectations from Foxconn, who is one of the key providers for servers for NVIDIA, and a very positive outlook as they look ahead on the economy, but importantly their sales and their revenues as well. If we look at it in sterling terms, the market was slightly weaker, and this was because we saw the pound, which strengthened against the dollar by around 0.78%. So that translation back into the pound meant that on the day, sterling stock markets were actually slightly negative. From an economic perspective, there were a couple of data points which were quite interesting from the US. The first one is on manufactured goods. We actually saw a modest contraction of around 0.4% month over month. So this was building on the 0.3% fall which we saw in November. However, the key area which we saw that moderation was transportation equipment. If we stripped out that component of the index was actually marginally positive. So it's the transportation component of that index which is really weighing on expectations. We're going to hear a little bit more about the expectations for economic growth this week when we have three Fed speakers. We are expecting them to be a little bit more cautious in terms of their expectation for interest rate cuts. Currently, there are only 2 interest rate cuts priced in for this year, and that's because we are seeing what is a fairly strong economy, and we're seeing inflation which has started to moderate in terms of the pace in which it's fallen. Yesterday, we also heard that Michael Barr, who serves as the Vice Chair of Supervision for the Fed, has stepped down from his role. This is before Donald Trump comes into power. He feels that there's a risk of dispute as Trump continuously tries to challenge the decisions and the actions of the Federal Reserve. He feels he's better served in his post as Governor of the Fed. That's all for today. Please do tune in tomorrow here on Morning Markets.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.